Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the one-day chart on Coinbase. And last time we spoke, guys, I told you things were getting interesting, and they really are. Last time we spoke, Bitcoin was sitting right up in here, guys, right huddled just below this this 5350 resistance, the top of this ascending triangle here. What we know now was a confirmed ascending triangle. I told you last time, guys, that I was not going to be shorting this area, even though I had discussed over the last week, I had discussed the possibility of shorting up in this area. I told you when we hit this area, I was not going to in the last update. And the reason I told you guys is we were seeing a lot of we were seeing shorts just stacking in this area, guys. We were seeing knowing that we're seeing volume tick up, short stacking in this area, this bullish looking ascending triangle, guys. All these signs were that things were going to end up possibly breaking up, and of course they did end up breaking up. Now I told you last time, guys, I find it interesting, and actually I've told you for the last 2 months now, to watch this area right here. This is an extremely relevant zone between 5350 and 5600. That was that area with that held the golden pocket from this swing high to this swing low. That of course, the golden pocket is, for those that aren't familiar, if you haven't watched my prior videos, the area between the 618 and the 65 fib level. And I told you breaking above that zone was extremely important to do. And we've broken above it now. We'll see if we can close above it. But right now, this is extremely relevant because we're seeing the top of this zone find resistance right at where this prior resistance was here. Really, this was the area of the bull's last stand. When we broke down from 6,000, this was the only area that put up a fight until we finally ended up to our low here at 3150. And so it's no coincidence that if I draw a little ray right from the top of this zone here, this prior swing high, we're literally almost to the dollar finding resistance right at that zone here, right at that prior high here. Now, this could be calling for a double top. It certainly looks like a possible double top here, guys. And either way, I think that there's a good, whether or not we break down from this point here, and I discussed this in my prior video, guys. I really want to. I'm more than ever. I do believe that we are going to see a larger breakdown to at least 5,000, if not 4,500. And I say that because if we come over here and we look at, but in the short term, I need to clarify. I do think, for many reasons that I'm going to go over in this video, that we're going to see a breakdown. But in the short term, I finally think, even I told you before, I didn't think it was possible that I thought anything was possible, but I didn't think it was likely we're going to break this area. That's no longer. I think there's a good chance that we will break this area and at least test 5,800. The reason is, if I come over here and I look at longs versus shorts, guys, we broke up in price, and typically when there's a lot of guppies in the market, guys, when you break up in price, the guppies just follow price. So in other words, when price breaks up, you'll see shorts get liquidated, you'll see longs start to stack. We're seeing the opposite. Price broke up here, and we're seeing shorts. They already were stacked, but we're seeing shorts continue to stack as price is going up. That's a sign that that's a sign that the guppies, there are really not a lot of guppies in the market. Retail has gotten a lot wiser than they were in 2018 and will not fall for the same old tricks. Sorry, guys, had to pause the video there real quick. So yeah, the guppies, we're not seeing nearly the guppies that we saw in 2018. People are getting a lot wiser. And so if you're a market maker, if you're somebody that's trying to move the market and manipulate the market in one direction or another, it's much more difficult to do. And we're finding ourselves in a very interesting position. So price is going up, and instead of liquidating shorts, people are actually adding to their positions. As we're approaching major resistance, people are expecting, a lot of traders are expecting a rejection. A lot of traders were expecting a major rejection off the top of this prior order structure back here, guys, without question. I mean, we can see it with the short stacking, and I guarantee you there's a lot of traders, a lot more traders, that are looking at this $6,000 resistance, what was resistance for literally over a year in 2018. Well, not, or I shouldn't say it wasn't over a year, but was literally resistance for a good portion of 2018, just bouncing off of 6,000 numerous times. What was resistance should act as, or excuse me, what was support. Sorry, guys. What was support for most of 2018, what was major strong support, should act as resistance on the way back up. That's typically how it works. So there's no question that everybody's expecting 6,000 to act as resistance. No one's really expecting us to just bust through 6,000 as if it's not there. Does that mean that, can we do that? Absolutely. Anything is possible. There's no question about it. But most people are expecting 6,000 to act as a resistance and to get a rejection off this zone. So we're getting very close to major resistance. We're already at this resistance here, but 6,000 is indisputably a major resistance, not just psychologically, but also technically. So market makers are in a very difficult position. If they push price up much higher to liquidate all these short positions here that are stacking, they run the risk of pushing it up higher to that 6,000. Because what happens when you liquidate short positions? When you liquidate short positions, they have to cover. What happens when they cover? Basically, they're buying. And so again, you're pushing price up just a little bit higher. Every time you liquidate a short, you're going to push it up just a little bit higher. So if they push price above 6,000 and if 6,000 gets decisively broken above, by decisively I mean if we get a daily candle both opening and closing above 6,000, the wave of FOMO that is going to come in, the wave of new buyers that will be attracted in, the wave of new money that will be attracted into that scenario, in my opinion, will likely open up the floodgates, and it's going to be very difficult to contain. And I think market makers, they want to buy price, they want to buy Bitcoin at least one more time down here at around 4,500, if not 5,000. Now, again, I could be wrong on this, but again, this is where that market psychology comes in, guys, and just basic experience in trading this market for the last couple of years. That I believe that's the most likely scenario. I think there's a good chance we could get rejected right here, and that would not be surprising at all. I think a more likely scenario is we're going to try to liquidate those shorts. They're going to drive price up here to about 5,800, somewhere between 5,800, 5,900. We're going to get that rejection off of that 58, 5,900, and then we're going to be coming back down here to possibly that 5,000, if not this $4,500 area down here. Of course, we have this major ascending support line to watch. If we break below that ascending support line, I think there's a good chance we're going to come down here to that 4,000, what was a major resistance. I would expect 4,000 to act as support. I still have buy orders laddered in between 4,500, if not 4,000, although I've upped. I used to have them very heavy down here at 4,000. I've got them a little more heavy here at 4,500. I'm expecting not quite as deep of a drop if we do come up here at 5,800 or so. But I still expect a major correction here, guys. I mean, just looking at the weekly chart, logic is going to tell you that we are so extended here on the weekly chart that logic just tells you, just looking at this, that we're due for a fairly decent correction here. Not only can you see that on the weekly chart, just for the you don't even have to be an experienced trader to see this, but looking at or to see that we need a correction here on the weekly chart, at least somewhat. But if you look at, as I've showed you before here, if you look at the MACD on the weekly chart, obviously we created, I've showed you guys this numerous times, I don't mean to beat a dead horse. We created a lower high here. If you look at the weekly MACD, we've clearly created a much higher high, that being an overall downtrend. That's hidden bearish divergence, and that would suggest a major breakdown. So you've also got a major technical indicator on the weekly MACD that's screaming for a correction, as well as looking at the network value to transactions ratio, the NVT. The NVT is called a major correction every single time. We called it back in December of 2017. We called it numerous times throughout 2018, including a major flat line here on red on the NVT prior to the breakdown to approximately 3,000. That's what was calling that breakdown in support, or for the breakdown from that $6,000 support. And of course, now we're seeing that NVT screaming red again, also screaming for a fairly significant correction here in the short term. So again, guys, for all these reasons, I do think that we're going to get a pretty significant correction. Now, I know what a lot of you are thinking right now. A lot of you are thinking, and I'm going to go ahead and cover it right now. If we come over here to the daily chart, what do we have? We have what everyone's been waiting for here. We've got the golden cross. Okay, so this is not the end-all be-all, guys. This is, first of all, let me preface this by saying, yes, this is an extremely bullish indication, guys. There's no question about it. All traders tell you that a golden cross like this in the scenario that we're currently in is a very bullish indication. Now, a lot of people, as I told you on my last update, guys, and I encourage you to go listen to it if you missed it. If you take the gold sector, for example, a lot of people have been pointing to the gold sector and pointing how we've had numerous crisscrosses between the 50-day and the 200-day moving averages, numerous death crosses and golden crosses, throughout a couple year period, and it didn't really amount to a whole lot. Other than confusion. And yes, there's no question. If that was the scenario with Bitcoin, I would just take this with a grain of salt. That's not the scenario with Bitcoin, though. Bitcoin has a history. It's got a short history, but the short history that it does have has shown that the crossing of the 50-day and 200-day moving average, in other words, the death cross or the golden cross, has been a fairly significantly good indication of a coming bull or bear market. And let me go ahead and I'm just going to cover the quick history of that as quickly as I can. So let's start with, first of all, let's apply the rule of five. The rule of five says any new asset class needs at least 5 years history before you can get a truly accurate technical analysis when you're looking at the long term. So rule of the five, we started trading Bitcoin in 2009 or in 2009. So let's fast forward 5 years later and let's start looking at Bitcoin in 2014 so we can get an accurate indication. So looking at Bitcoin in 2014, we can see that we were coming off a very long history of the 50-day moving average being above the 200-day moving average, which technically is a bullish sign, and obviously it was a bullish sign. We can see that Bitcoin just screamed up to all-time highs here. So let's take that first technical indicator where the 50-day moving average crossed below the 200-day moving average here on, let's see, that was April 9th, 2014. Okay, and let's see what happened when that happened. First of all, Bitcoin was starting a downtrend. Now, everybody thought it was just a correction because we were coming off new all-time highs from an incredibly bullish market. So everyone thought this may just be a correction. The death cross really was that first indication that, man, we might be in a serious bear market here. And sure enough, history proves that that was the case. It wasn't in bear market. That being said, what happened when we had the death cross here on April 9th of 2014? Did price just continue down to new lows here? No, not at all. Quite the opposite. We had that death cross, and instead of this price going to new lows, price increased 100, or excuse me, price increased 100%. 100% increase in price. That's incredible. So following a death cross. So of course, everybody thought this death cross was meaningless. We were just continuing the bull market. And of course, that was not the case. This death cross was something to definitely be reckoned with, was a definite indicator that those that ignored it got crushed. How do we know that? Well, we fast forward in time here. Now, it's worth noting, we had a death cross, and then shortly after that, in July of 2014, we had another golden cross. Okay, so anytime you have a back-to-back crossing like that, you take the second one with a grain of salt and assume the first one is accurate. And of course, that's exactly what happened here. We had a very quick golden cross followed immediately by another death cross, and of course, that took us down to low. So so in other words, that first death cross, even though we had a 100% increase in what we now know was a correction to the upside, a continuation of the downside, but a correction to the upside, 100% increase in price, that death cross should have been heeded because it was the first warning sign and a major warning sign that we were entering that bear market, or that the bear market had started. We had already entered the bear market. That was just confirmation of it. And of course, we ended up coming down here to new lows. And it took a year later before we had another golden cross. We had another golden cross here on July the 15th. That was a good indication that the bear market had ended. How do we know that? Well, we have the benefit of history to show that we ended up uptrending there massively. But worth noting, we had the golden cross there on July the 14th. And what happened? What happened on July the 14th, or a couple days, or very shortly after July the 14th? Did price end up heading up to new all-time highs? Nope. Price actually dropped 38%, 37.9%, 38%. Price dropped from that golden cross. Okay, and it actually, once again, crossed back over to a death cross and then immediately over to a golden cross. So you were wise to take note of that, and that should have been your first indication that we were entering into a bull market, even though the price corrected and dropped 38% after that golden cross. It was a very good technical indication that we were heading into a bull market. And of course, what happened? Of course, we crossed back up here and Bitcoin went on to all-time highs that we now know brought us up to, we didn't have another crossing since that golden cross on October 28th of 2015. We did not have another cross between the 50 and the 200-day moving average until after we peaked to our all-time high of $20,000. And then had a major correction. And the next time we had that crossing of the 50 to 200-day moving average was on March 31st, 2018. And once again, did that usher in new lows? Again, absolutely not. Following the golden cross, what did we have? We had a 54, almost 55% increase in price. And then, of course, it was a major signal. So everybody was laughing at this death cross, saying, no, the bull market has started or is continuing now. The death cross should be ignored. And, of course, anyone that ignored the death cross got completely crushed in 2018. So this was, even though we had a 54% increase in price following the death cross on March 31st of 2018, it was the first indication of a major bear market that we were already in. We just didn't know it, and that was confirmation that we were in. So I'm pointing this out, guys, to say, yes, we're now seeing a golden cross 1 year later from our death cross. Yes, that is, in my opinion, and nothing is a guarantee here, guys. So please don't. There's nothing that's written in stone that I'm about to say. But probability-wise, and with the benefit of history, we can say that yes, there's a good chance that this golden cross is the first sign that we have actually entered into the bull market that everyone is hoping for. That being said, if history is any guide, guys, and I talked about all the indicators that point for a major correction here in the short term, we should take note that there's a good chance that even though this is an extremely bullish sign, that we can absolutely have a very, very, very large correction here in the short term before we continue up with our bull market that we hoped all began back here with this low on December the 16th. So I just want to make sure you guys know. Now, what is going to invalidate all this? So again, I am anticipating a larger correction here, starting somewhere around 5,800, and I think it's going to come down possibly as low as 4,000. I think 4,500 is a very good target, and I think that the smallest it's going to correct is going to be here around 5,000. I think at least we're going to correct down here to 5,000. I could be completely wrong, guys. I hope I am. What will invalidate that? In other words, when will I say that analysis was wrong? Again, when we break above 6,000 decisively, in other words, a daily candle both opening and closing above 6,000, and we come back down for the retest, and what was resistance starts acting as support. In other words, we get support and we start consolidating, at least consolidating above 6,000. If and when that does happen, I will start to believe that larger correction is no longer there and that we're likely heading back up to and start that major bull run that we're all hoping for. That being said, guys, I do think that a major correction is definitely on the table here. Some of you have asked for my Elliott wave count, guys. I don't put a lot of emphasis on Elliott wave, at least in low volume markets. And even though we're seeing a major spike in volume, I don't think that we're in a high enough volume market just yet to where it's going to be very accurate. That being said, guys, if I am counting Elliott wave, guys, I showed you this last time. I still think this is an accurate count. I think we're looking at a 1, 2, 3, 4. The 5 could obviously stop here. I think more likely we're going to come up here to 5,800 possibly, and then of course we're going to start our correction, which is very likely going to look something like this, in my opinion. Again, this is just pure speculation on my part, guys. I'm not going to draw it all out to you because I don't think there's a lot of relevance in this, but for those of you diehard Elliott wave traders, I do think this is the best count out there as of right now. This ABC, just don't put a lot of stock in that. Just expect a correction somewhere around 5,800, somewhere between where we are now and 5,800 in my opinion. So I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe, take care of yourselves. This is Working, signing out.